Saudi Arabia is the world's largest oil exporter, and it has a long history of using its oil power to influence global politics and economics. But what happens when Saudi Arabia squeezes the oil market too hard? Stay tuned to the end of the video to find out. Over the past few months, the cost of oil has steadily increased. It has gone up from approximately $70 per barrel in July to nearly $100 in the previous week. This marks the highest price point since Russia's invasion last year. The primary cause for this increase is a series of independent reductions in oil production by Saudi Arabia, the world's largest oil exporter. Saudi Arabia is presently producing 1 million fewer barrels per day than its OPEC allocation. In this video, our objective is to understand why Saudi Arabia is choosing to decrease oil production, even if it results in reduced revenue. There are three potential explanations for Saudi Arabia's voluntary reduction in oil production. Firstly, Saudi Arabia, particularly Crown Prince Mohammed bin Salman, also known as MBS, may desire consistently high oil prices to finance their ambitious Vision 2030 initiative. Secondly, due in part to strained relations between Saudi Arabia and the United States, they may be less concerned about the political considerations of Western consumer countries. Lastly, it is conceivable that Saudi Arabia is elevating oil prices in an attempt to undermine renewable energy products. Let's begin by discussing the first rationale. Vision 2030, for those who may not be familiar, is a significant initiative led by MBS. First introduced in 2016, its objective is to transform Saudi Arabia from a nation heavily dependent on oil exports into a diverse and economically influential regional powerhouse. Given that Saudi Arabia is the largest oil exporting country globally, its financial stability and the overall economy are heavily reliant on oil sales. Approximately 3/4 of government revenue and roughly 1/3 of Saudi Arabia's total GDP are derived from oil income. MBS has made the strategic decision to reduce Saudi Arabia's dependence on oil by utilizing oil revenue to invest in various sectors such as education, sports, and infrastructure. One ambitious endeavor within this vision is the development of a 170-kilometer-long linear city known as the Line as part of the NEOM project. To achieve these goals, MBS has determined that it is necessary to maintain consistently high oil prices. Therefore, he is willing to accept a short-term reduction in revenue by unilaterally producing less oil than the OPEC quota dictates. This approach aims to stabilize oil prices at a higher level, ensuring a steady income stream for Saudi Arabia to support the realization of Vision 2030. The second explanation lies in Saudi Arabia's reduced sensitivity to US preferences. For a significant period dating back to the 1970s until relatively recently, the United States and Saudi Arabia maintained a close alliance. This alliance was built on two key elements: the US providing security assurances and the practice of petrodollar recycling. Petrodollar recycling involved the US purchasing oil with dollars, which the Saudis then reinvested in American weaponry or US government debt. Historically, when oil prices rose to levels that could harm the US economy and its government of the day, the United States often exerted pressure on Saudi Arabia to encourage OPEC to increase oil production. However, this dynamic began to shift in the 2010s with the emergence of American shale oil production and the gradual reduction of US involvement in the Middle East. Under the Biden administration, US-Saudi relations have deteriorated further. President Biden accused Saudi Arabia of involvement in the death of Yemeni children and pledged to isolate the country internationally following the murder of journalist and dissident Jamal Khashoggi. In fact, President Biden requested that MBS lower oil prices before the midterms last year. Nonetheless, MBS disregarded this request and decreased oil production, illustrating that the Saudis are now less responsive to domestic US political considerations. The third potential motive for MBS's desire for elevated oil prices is the possibility that he intends to leverage these higher prices to hinder the progress of renewable or environmentally friendly energy initiatives. This might initially appear counterintuitive because one would expect that higher oil prices would expedite the shift away from oil towards renewable energy resources. However, due to the fundamental role of oil in the global economy, increased oil prices result in higher headline inflation, prompting central banks to respond with elevated interest rates. This situation poses challenges for green energy projects as renewable resources such as solar, wind, hydropower, or even nuclear energy all involve substantial initial capital investments, with subsequent returns generated over time through energy sales. Consequently, a substantial upfront financing requirement is typical for such projects. Elevated interest rates translate to reduced borrowing and, consequently, fewer green energy projects. To clarify, the Saudis have not explicitly expressed their intention to obstruct renewable projects. Nevertheless, this outcome of discouraging green energy projects is a potential advantage arising from higher oil prices. It's also noteworthy to mention that the Saudis pursued a similar strategy back in 2016 when they intentionally drove down the oil prices with the aim of financially distressing American shale oil producers. In essence, fracking, which is a method of oil production, comes with significant operational expenses. The Saudis recognized that by maintaining low oil prices over an extended period, they could force American shale producers into financial losses. Given that fracking also entails substantial capital investment, many shale producers had acquired significant debts. Consequently, a prolonged period of low prices effectively led to the financial ruin of numerous producers and discouraged others from entering the industry. The Saudi authorities were quite explicit about their intentions during this period. The oil minister at that time proudly stated that Saudi Arabia benefited from lower production costs and intended to leverage this advantage to compel US shale producers to face an inevitable reckoning. This provides further insight into why MBS is currently pursuing higher oil prices. So, will this strategy effectively achieve its desired outcomes? Well, its success hinges on a couple of factors. Firstly, it depends on the supply side of the equation, specifically whether the Saudis can persuade the rest of OPEC not to significantly increase their oil production in response to Saudi Arabia's independent production reductions and the resulting higher prices. The key player in this dynamic is Russia, which ranks as the world's second largest oil exporter. Earlier this year, Saudi Arabia and Russia had a falling out due to Russia clandestinely exceeding its allotted oil production levels. However, in recent months, they have realigned their production and are presently producing 500,000 barrels per day less than their OPEC allocation. Nevertheless, if Russia encounters financial challenges, or if President Putin requires additional funds to support his activities in Ukraine, this situation could possibly reignite tensions. Secondly, the effectiveness of this strategy also hinges on the demand side, specifically how swiftly the rest of the world can transition away from fossil fuels towards greener energy sources. In this regard, historical trends align with MBS's perspective. Nearly every year, politicians and analysts express optimism about a forthcoming peak in oil demand. However, regrettably for those committed to a genuine green energy transition, demand for oil continues to grow year by year. Yet the most formidable challenge for Saudi Arabia in this endeavor might be avoiding a global economic recession. Historically, oil prices have followed cyclical patterns. Elevated oil prices can trigger global recessions, leading to reduced demand, subsequently causing lower prices. This, in turn, prompts the global economy to recover, raising prices once more and restarting the cycle. If the Saudis drive oil prices excessively high, they risk dampening demand, potentially resulting in a significant price decline. We witnessed a glimpse of this scenario recently when oil prices sharply declined following the announcement of the US Environmental Investigation Agency that gasoline demand had reached its lowest seasonal point in 25 years. In conclusion, while Saudi Arabia currently wields significant geopolitical influence, historical trends suggest that oil prices will eventually revert to lower levels, impacting the Saudi economy accordingly. That's it for today. And now we invite you to share your thoughts in the comments. Do subscribe to the channel if you like our content, and we will catch you in the next one. Bye.